Okay, so our final presentation before lunch is going to be Cassiar Gold. Cassiar is focused on its 100% owned district-scale Cassiar Gold Property located in northern BC and Sheep Creek in southern BC. The Cassiar Gold Project has a historic production of about 350,000 ounces, currently has a mineral resource estimate of 1.4 million ounces, and Sheep Creek has about 750,000 ounces, and they produced between 1899 and 1951. Cassiar has a market capitalization of 25 million, fully diluted share count 177. They trade under the TSX Venture under GLDC, OTCQBX under CGLCF, and Frankfurt under 75.6. I'd like to welcome President CEO Marco Roque. Thank you.
Thank you. Good morning, everyone. My name is Marco Roque. I'm the President and CEO of Cassiar Gold. Thank you all for attending and listening to what I consider to be one of the most exciting and undervalued exploration companies, not only in Canada, but in North America. I would just like to bring your attention to the disclaimer and forward-looking statements that I'll be making today. So Cassiar Gold, we're really checking almost all of the boxes. First of all, starting on a column there on the, I guess, your top left, we are a company that is led by a team of executives that has a track record of discovering, building, and operating mines, not only in British Columbia, where we have our assets, but really across Canada and the world. Our chairman, Steve Ledwin, has just been inducted to the Mining Hall of Fame for the acquisition and development of the Côté project that underpins most of IAM Gold's valuation. He was their CEO for 10 years. Steve Robertson led the team that permitted the Red Chris mine, which is just 200 kilometers south of us. Chris Stewart is now the GM for the Hemlo mine, Barrick's mine in Ontario. James Maxwell led the team that discovered the Goose project, 10 million ounces in the Arctic, and sold to B2. We're very blessed as well. We're in a Tier 1 jurisdiction. Political risk is a big theme these days, so we're very happy to be in Canada. We are also very blessed not only to have exploration permits, but to have mine permits already in place, because we have 5 past producing mines in our massive district. And more importantly, we have community and indigenous support, without which in Canada you don't really have a project. So we're very blessed. Other than that, we have a resource of 1.4 million ounces inferred at 1.14 grams per ton. Not close to surface, literally at surface and outcropping, and basically open laterally and at depth. That resource is based on 56,000 meters of drilling. We've drilled 46,000 meters since the last resource update, and we actually have a resource update coming within 3 weeks. Other than that, we are very, very undervalued. Our market cap is 27 million. We have roughly 4 million in the bank. And just to highlight how undervalued we have a lot of infrastructure that includes a mill, underground workings, portals, paved roads, mining roads, that the replacement value is over $200 million if you wanted to replicate that today. So that really highlights the potential that we have. And just in terms, to give you a sense of the drilling, we've drilled as an operator 62,000 meters, over 200 drill holes, and our hit ratio is over 99% hitting gold. So we really brought this down to a science. The more we drill, the more we expand mineralization. Cap structure, 27 million. We have around 4 million in the bank, good analysts and newsletter coverage here. Insider ownership is growing, close to 15%. Insiders participate in every single private placement, buy regularly on the open market. I've personally put $1 million into the company, so this will work come hell or high water. We've also been able to attract very strong institutional support over the last 5 years. When I came in as CEO 5 years ago, there were no institutional investors, and we've brought a really nice mix of investors in the last few years as well. So to give you some bearings on a project, Northern BC, 59,000 hectares of opportunity, 100% owned, 590 square kilometers. We have Highway 37 bisecting our property, north of the highway Cassiar North project area, south of the highway Cassiar South project area. In the north is mostly disseminated open pitable targets, like the Taurus deposit, where we have the entirety of the resource starting from surface. And in the south is where we have the past-producing high-grade underground veins. These veins are on average 3 meters wide and running on average between 10 and 20 grams per ton. All of the vein systems are open along strike and down dip, and we have extended them very, very successfully. This picture here shows you a little bit of the topography. Unlike the Golden Triangle, we don't have steep mountains or glaciers or heavy snowfall. This is really an idyllic terrain, an area to work with, a lot of flat ground. You know, the valley that you see there in the picture is about 60 square kilometers. The footprint of the deposit is 1 square kilometer. We have great access, paved roads. That pickup truck that you see there on the bottom right is sitting on top of $4 billion worth of contained metal value, which is about to grow substantially as well in the next resource updates. Here are some more examples of the infrastructure that we have. Portals, underground workings, 25 kilometers of those, power lines, a fully owned and permitted mill, tailings facilities with capacity, 160 kilometers of mining access roads, and a full 48-person camp. In addition to the infrastructure, we also have mine permits, which in Canada and BC tend to be very important. So we have Taurus Gold Mine permit in the north, covering most of the Taurus deposit, and a Table Mountain Mine permit in the south for 20 square kilometers, covering all the past-producing high-grade underground veins, the mill, and tailings facilities. That puts us years and years ahead in permitting timelines. It's a really, really great asset. So, as I mentioned, we have kind of two key styles of mineralization, just to give you the sense of what we have here in the south on the high-grade veins, you have the 4 past-producing mine systems that total over 300,000 ounces of production. The weighted average grade, reported recovery grade, is 16 grams per ton. We've extended all of these veins along strike and down dip, with heads up to 4.8 meters at 35 grams per ton. So it's a really exciting area. We don't have a resource here yet, but you can see by the historical grades and some of the drilling that this is very juicy, and it's something we'll continue to advance because this is within a mine permit, with infrastructure, with underground workings, with a permitted mill that could become a near-term development opportunity by leveraging all of those and also the skill set that we have within our board. If we're putting 20 gram per ton material on the mill, which is kind of the average grade of the material we've extended in the last few years, that mill could be producing 60 to 70,000 ounces a year, which is an interesting production profile, especially for a small junior like us. Now, the other aspect of our company, and really what we see an M&A exit opportunity where we see the majors could be really interested, is our bulk tonnage. Our objective is eventually to get to 5 million ounces. Right now we have 1.4. It's going to increase substantially in the next resource update, is coming in 3 weeks. But right now the footprint of the deposit is 1 kilometer by 1 kilometer. Mineralization starting at surface down to 270 meters. Overburden is on average 10 meters. But 90% of the 1.4 million ounces are within 150 meters from surface. And we've been extending quite successfully in the last 3 years since we did this resource update. And basically the entire system remains open laterally and open at depth. So a lot of room to grow still. These are some of the highlights of some of the drilling. The pink area is the resource from 2022. The yellow dots are the location of the drill holes since then. You can see some of the highlights there, typically hitting from surface, typically 0.5 gram to 2 grams. Of course, with some instances of very high grade up to 22 grams per ton. Other than that, taking kind of a further step out, you see some, that drilling at Taurus. You have the 2 targets, Story East and Wings Canyon, which they don't connect yet, but that's just because we haven't drilled it yet. A new target that we drilled in the last couple of drill seasons is New Coast. New Coast is 2.5 kilometers south of Taurus. We put 6 drill holes there in 2023. They all came back mineralized, with a highlight there being 95 meters at 0.9 grams per ton. We followed up last year. We hit very exciting 141 meters at 0.89 with 3 more drill holes there. So basically, a New Coast is starting to look a lot like Taurus in terms of size. We believe that those 2 targets alone could get us to our 5 million ounce objective, let alone the potential around it, of which we do have a lot. And this is why we, when we do mapping, what we consistently see around Taurus or within that 50, 60 square kilometer valley is consistently sticking out of the soil outcrop that it has the similar style of veining, alteration, and mineralization as Taurus in a very, very large footprint. That's why we did a mapping exercise over almost 11 square kilometers, so 11 times the footprint of Taurus, with consistently finding that type of outcrop. And also we've completed over 70 square kilometers of geophysics, and that's actually coming. That will be released in next week. So next week we expect to release the geophysical results for 70 square kilometers, and then in 3 weeks the resource updates. But we're consistently seeing very large areas around Taurus that are really seem to be very, very prospective with a similar style of mineralization sticking out of the grounds. And basically mapping and sampling is supporting our thesis. Geophysics so far has supported our thesis, and I think you're going to like what you see next week. And also the drilling as well. And again, we have a 590 square kilometer land package. We've only started to scratch the surface. I believe this is to be a tier 1 project. We still only have 1.4 million ounces, but I truly believe we're going to eventually get to 5. And the results so far have been, helping us get closer and closer to that point. So very, very excited to continue to do some work here. So just before we get to some questions, I wanted just to give you some highlights, checking all the boxes. So we have infrastructure and permits already in place in a tier 1 jurisdiction, in a safe jurisdiction with community support, indigenous support. We already have a significant resource with a lot of potential for expansion and discovery. All the work that we do is supporting that. We have a very experienced leadership team that has discovered, built, and operated mines in BC, in Canada, and around the world. We have full community support. They're very supportive. We deal with one indigenous group, the Cascadena. They really want to have the economic opportunities. They want to see this mine in production as soon as possible. We have an excellent partnership, and we really abide by the highest environmental standards, and we are also very proud of that. We are very, very undervalued for what we have. 27 million market cap with 4 million in the bank. And unlike most juniors, we not only have the potential to exit via M&A, and we are building through the bulk tonnage something that we believe the majors want. Although there's a handful of majors that want to see at least 5 million ounces or 5 million ounces, and we believe we're going to get there. But also we have the potential for bootstrapping, leveraging on the permits, on the infrastructure, on the mill, on our skill sets, and on our high grade. So thank you very much for your time, and I'll have a few minutes for questions.
We've got a couple minutes for questions. If anybody has any questions for Marco.
I don't have a map here, but yes, there are mine operators in proximity. I mean, we have mine operators in our boards. So the closest mine that we have is the Red Chris mine. That actually was permitted by one of our board members. So the majority owner of that mine is Newmont. Newmont is the largest gold producer, or Western gold producer on the planet. They actually have deployed over $5 billion acquiring 3 mines in British Columbia. So the Red Chris mine, the Brucejack mine, which is a former Pretium asset, and basically GT Gold, which is next to Red Chris. So 2 of them are 200 kilometers away from us along highway, and Brucejack is roughly maybe 400 kilometers. So I would say Newmont is if that's what you're wondering, I would say Newmont is the natural buyer, although with 1.4 million ounces, we're definitely still too small for them, although we check all the other boxes. But we're solving for the most important and most valuable box, which is getting to the 5 million ounces. And the geology is that we have seems to be indicating that we can at least have that.
Any other questions? We got about a minute and a half. Well, I guess I can ask one, I guess. So, you have a lot of these, Australian model seems to be to bootstrap earlier rather than later. What's the decision, because you seem to have almost everything in place, you got the sort of the team in place. How come you're not bootstrapping now? What's the strategic reason?
Well, our strategy is really to grow this asset and sell it to a major. That's our main strategy. We'd have the optionality to bootstrap, but I mean, it's easier to talk about it, but it's harder to execute, and we do have a lot of cases where things fail. So we are very mindful of that. We have a team of experienced executives that has done it before, has seen, you know, the good, the bad, and the ugly. So what are our challenges right now? To be very, you know, straightforward. We don't have a resource on the high-grade underground veins. So, I mean, the model for Canada is really have the 10-year, 15-year mine life and then put it in production. A lot of these high-grade underground veins, a lot of companies run on a rolling 3, 5, 4, 6-year model that's continuously replaced as you continue to produce. So we could get to that. But first, you need to have at least a good size amount. So we don't have a resource in the south, but we guesstimate that we have around 100,000 ounces, maybe at 20 grams. So this is not 43-101 compliant. This is our own internal estimation based on our drilling and what we see there. So, you know, at 20 grams per ton, that's basically a year and a half worth of production. It's a little bit short. So to actually make sense or logically for us to be in a comfortable position to advance that, we believe that we need to define, say, 300,000 ounces to, say, 500,000 ounces of 20 gram per ton, and then you have a good head start. This is actually separated into in 4 different portals and mine systems. So we're also not just strangled into one portal. So this could be a good basis to then basically look at a development, because now you have, you know, 1 year, you have several 5, 6, 7, 8 years worth of runway. You don't need a 10-year to bootstrap, but you definitely need to have, you know, a nice runway from different portals and also de-risk the other aspects. We also need to have, we're doing water monitoring, we're doing wildlife monitoring, but we'll be missing the weather. We don't have a weather station. We need to install a weather station in our spot. The closest weather station is too far. We need 2 years of data for that. So this is something that, you know, at the earliest would take at least 2 years. So we would need to do more drilling to continue to extend the known veins, hopefully find new veins, do more baseline studies to be able to support the environmental and permit approvals that still need to be attached to the current mine permits and the mill permit that we have.
Okay. So we've got lunch now. Thanks a lot.